You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday, 13th day of September, 2024. How about that? Friday the 13th. Careful. Thanks for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is private. That's for members only and those who are taking our 1-week free trial. If you haven't taken the 1-week free trial, go to mytradingiq.com, and at the top of the page there's a huge link. Can't miss it. 5-day free trial, no credit card required. Just click the link, fill out the registration form, hit submit, and what we'll do is we'll get your desktop set up today, get your indicators indicating today. You'll have access to the indicators over the weekend. There are markets that trade over the weekend. And then your trial will officially begin on Monday. So get signed up today, get familiar with the indicators over the weekend, and then 5 consecutive trading days next week, Monday through Friday. Now, when you take the trial, you're not just getting access to the live training room. In fact, what happens during the trial is we treat you just like a passport holder for the entire week. You have access to every resource that our passport holders have access to, with only one exception. That is the members only workshop every Thursday night. And we had a very good one last night. Covered a lot. I think we took up almost the full 2 hours. So if you remember and you missed it, go to the vault and check it out over the weekend. Now, when the live training room ends each day, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. That's everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast live. Let me give you the best way first. Go to mytradingiq.com. This time, scroll down the page a little bit to where it says noon broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen going forward is every trading day, about an hour before this broadcast starts, you will get an email. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy and can't join live, but want to get caught up later. You can do both of those via our YouTube channel, and it's really easy to remember. youtube.com/CFRN. You already got the YouTube part, so just remember CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's really a great way to get to know who we really are. Better yet, thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but you can just pick days at random. And again, you'll see exactly how we've evolved over the years. So get to know us. youtube.com/CFRN. This is our daily schedule. Yesterday, Michael wasn't able to join us. Took his son to the doctor. He's feeling much better. So that's an answer to prayer. Each day we start out with our daily devotional, word of prayer, some world news, some market news, a recap of the Logic 247 alerts, the concierge trade alerts, and then about 12:50, that's 50 minutes into the broadcast if you're listening after the fact or watching after the fact, Michael joins us and gives us a recap of what happened in the live training room this morning. And then we'll go live on the TradingView platform, do some live trading for about 30 minutes, and then I'll wrap up the week with our good word for the day. So, the topic of our devotion that we're in right now, we're on day 14, God's dream for your life. Our scripture today, 2 Corinthians 4, verses 16 through 18. And I'm going to share it with you from the Message translation. So we're not giving up. How could we? Even though on the outside, it often looks like things are falling apart on us. On the inside, where God is making new life, not a day goes by without His unfolding grace. These hard times are small potatoes compared to the coming good times, the lavish celebration prepared for us. There's far more here than meets the eye. The things we see now are here today, gone tomorrow, but the things we can't see now will last forever. 2 Corinthians 4, verses 16 through 18. God's purpose is greater than your problems or pain. When we go through difficulties in life, first thing we try to do is blame somebody else. But it doesn't matter where your problem comes from. God still has a purpose for it in your life. Even when you do stupid things, God can use that. Even when other people hurt you intentionally, He can use it. Even when the enemy plans bad things for your life, God can bring good out of it. So I encourage you, the next time you encounter a trial or tribulation, which for most of us will probably be in the next 5 to 30 minutes, Instead of thinking God has deserted you, change your thinking. Remember, we've been talking, our good word for the day the last few days has been change your thinking, change your life. So when you encounter a difficult situation, think differently. God, I know you're here. I know you see what's happening. I know you understand how I feel. What are you trying to show me? What are you trying to teach me? How are you shaping my character? Because as we go through these life lessons, if we don't get it, guess what? We're gonna repeat the class. And for some of us, we've been repeating the same class over and over and over our whole life because we never get it. When you don't get it, ask God. Ask Him to speak to you. Ask Him to show you. God's purpose is greater than your problems and your pain. Remember, God has a plan for you. You need to look past the temporary pain and look instead at the long-term benefit in your life. Romans 5, verses 3 and 4 says, we can rejoice too when we run into problems and trials, for we know that they help us learn to be patient. And patience develops strength of character in us and helps us trust God more each time we use it, until finally our hope and faith are strong and steady. What's the purpose of your problems and difficulty? That's easy. God wants you to learn something. Every storm is a school. Every trial is a teacher. Every experience is an education. Every difficulty is for your development. Most of us are slow learners. If you don't learn something, God will bring it up again in your life. It will come back because God is more interested in your character than He is in your comfort. He's more interested in seeing you become more like Christ than He is in making things easy for you. Some of you are facing a major difficulty right now. It may be an illness or guilt, a financial problem, a strain in a relationship. Does God have a word for you while you're going through your difficulty? Absolutely. God is saying to you, don't give up, grow up. Fulfill the purpose of your difficulty, becoming more and more like the person He created you to be. Join me in a word of prayer. Heavenly Father, thank you for reminding us that though our outer bodies may feel weak and worn, our inner spirit is being renewed day by day. Help us to fix our eyes not on the temporary struggles of this world, but on the eternal glory you have promised. May we not lose heart, trusting that what we endure now is light and momentary compared to the joy that is to come. It's in Jesus' name we believe and pray. And everybody said, amen. Well, happy Friday the 13th. That was really a successful. I'm not one for those types of movies, Chucky the Slasher and all of that. I don't know if he was in the Friday 13th, but anyway, that's just not my genre. You won't ever hear me recommend one of those kind of movies, but boy, they were quite popular. I don't know. I think they did. They built a syndication out of the whole thing. Friday the 13th. Well, I don't know what they call the other ones because I didn't watch them. But anyway, let's get back to the markets. All right, I'm going to give you the numbers here from around the world. Start in the U.S. with the cash markets or the indices. Currently, the Dow's up 353 points, almost 1%. The NASDAQ is up 90 points. S&P 500 is up 28 points. The Russell 2000 is up 51 points. That's 2.5%. In the commodity basket, crude oil is up 31 cents, trading 69.27 last. Gold up $30.70. New all-time highs for gold again today. Last trade 26.1160. That's a gain of almost 1.25% in this session. Silver up $1.14. Trading 31.25 last. That's a gain of almost 4%. I think we've had 4% back-to-back days. Now, when the price of silver moves $1, that's worth $5,000 per contract traded. When gold moves $1, that's worth $100 per contract traded. And when crude moves $1, that's $1,000 per contract traded. In the Asian markets at the close, the Nikkei dropped 251 points. Shanghai fell 13. The Hang Seng gained 128. And in the European markets at the close, FTSE up 32. The DAX up 181, 1%. The CAC up 30. So we had a mixed day in Asia. It was a green day for the UK. And it's a big green Radio Friday here in the US of A. So let's take a look at some news. They did it. The Boeing workers are on strike. Boeing's 33,000 production workers voted overwhelmingly to strike yesterday, with over 90% of members rejecting the company's proposal of a 25% wage hike over the next 4 years. The work stoppage is a blow to new CEO Kelly Ortberg, brought on last month to restore faith in the company amid a series of safety lapses. I've been saying for a while it seems like Boeing can't catch a break, and then there was some news the other day that looked like they had finally caught a break, and well, now they're back to no break. The strike, which began overnight, is expected to be costly. Boeing is the U.S. single largest exporter by dollar value, generating close to $80 billion in revenue each year in commercial and military aircraft, weapons, and related products and services. When production workers last went on strike in 2008, the 52-day work stoppage cost the company an estimated $100 million per day in deferred revenue. Think about that, $100 million per day for 52 days. SpaceX's Polaris Dawn mission made history yesterday as billionaire Jared Isaacman and SpaceX engineer Sarah Gillis completed the first private spacewalk. pair exited their Crew Dragon capsule roughly 450 miles above Earth in new SpaceX-designed spacesuits. Before the walk, the crew underwent a 2-day pre-breathe process, breathing pure oxygen to purge nitrogen from the bloodstream while decreasing cabin pressure to reduce the risk of decompression sickness. All 4 crew members wore spacesuits, which operate at a lower pressure than the spacecraft's interior, and the entire capsule needed to be depressurized as it lacks an airlock. The mission is also conducting 36 scientific experiments from 31 different institutions, including studies on radiation exposure, motion sickness, and eye health. Many aim to contribute to NASA's human research program and provide insights into deeper space travel. Only 265 humans have conducted a spacewalk, with 149 from the U.S. But yesterday was the first private spacewalk, pay for play. I wonder how much Jared had to pay to make that historic walk. And a good question, if you had the money, would you do it? Are you that adventurous? If money wasn't an object, as it's not for Jared, would you do it? I don't think I would do it. Artificial intelligence startup OpenAI released its latest flagship large language model yesterday, dubbed OpenAI O1. Its first major product debut since the May reveal of GPT-4o. The new model and a more cost-effective limited version are currently only in preview for paying users and have a weekly message limit. We talked about it yesterday. It was hyped as the Strawberry model. Reportedly differs from other models by the strength of its reasoning capability. OpenAI says the model breaks down queries into discrete steps before offering an answer, privately refining the response. The model was trained via reinforcement learning, an approach that teaches the system via rewards and penalties. The text-based model surpassed GPT-4o on math and coding abilities and cannot currently access the web. Over 200 million people use ChatGPT products monthly, and the company boasts nearly 60% of the market share in AI search. Product debuts as OpenAI announced a new fundraising round valuing it at $150 billion Wednesday. So what do you think about AI, artificial intelligence? I saw a video yesterday where some scientists were saying it's really not intelligence at all. Now, they went into some very lengthy explanations, but you could Google it. Is artificial intelligence really intelligent? And you'll probably find the video that I'm talking about. I mean, to us, the way it sends back responses so fast, I mean, it seems like it's thinking. But these scientists were making an argument that it's really not. And one thing we all know is it doesn't have a soul. In other news, I talked about this briefly this morning in the live training room. MicroStrategy bought an additional 18,300 Bitcoin for $1.11 billion. And now as a result of that purchase. MicroStrategy, that's Mr. MSTR. That's a stock. You can buy if you want. Mr. alone now holds 1.2% of the total Bitcoin supply, showing no signs of slowing down with its BTC acquisition strategy. And it seems as though more and more companies are starting to follow their model and putting their spare cash in the BTC. In other news, market news. I guess that was market news. Hotter than expected readings on consumer prices and on some wholesale prices over the past 2 days have led markets to price in a higher likelihood that the Federal Reserve will opt for a smaller, more conservative interest rate cut at its September meeting. It's on the 18th. A bigger reduction could send stocks reeling. Friday saw a rise in expectations for a jumbo rate cut by policymakers per the CME FedWatch tool after reports by the Financial Times and the Wall Street Journal. The policymakers were struggling to come to a decision. Investors now place a roughly 45% probability on a 50 basis point cut, compared with 15% at one point on Thursday, yesterday. That's a jump. Some strategists have said that a 25 basis point cut would be a more welcome sign from the Federal Reserve. For everyone who's asking for a 50 basis point cut, I think they should really reconsider the amount of volatility that would cause in short-term funding markets. It's just not something the Fed wants to risk. Well, I don't know anybody that wouldn't prefer a jumbo rate cut, as they're calling it now. So, where to move your money when interest rates are poised to fall? With the Fed poised to cut interest rates next week, the ripple effect will show up in certificates of deposit and high-yield savings accounts, which currently offer rates of more than 5%. They aren't likely to fall dramatically following a rate cut, but rather ease back closer to 4% and linger above the inflation rate for at least the next year. So these accounts should still be your go-to for your emergency fund or cash set aside for short-term expenses. That said, the Fed's anticipated action offers an opportunity to make some money moves that take advantage of the downward tilt in interest rates. According to Preston Sherry, founder and president of Concurrent Financial Planning, he told Yahoo Finance, the projected cutting may pull the rug from under the high-yield savings rate. Now might be the best time we've seen in a few years to swap cash in high-yield savings for long-term bonds to lock in a higher yield for income payments for lifestyle and retirement portfolios. Since 2022, when the Fed began to raise short-term interest rates, bank savings accounts have been a better place to park your cash than bonds. That's set to change. In fact, according to Bloomberg, bond traders are once again ramping up wagers on a half-point interest rate cut by the Federal Reserve next week, just days after that bet seemed all but over. The likelihood of a 50 basis point move, according to Bloomberg, climbed to 40% today, up from as low as 4% earlier in the week. The repricing added to a rally in U.S. government bonds, lifted small cap U.S. companies the most in 3 weeks, and weighed on the U.S. dollar. The shift marks a rapid about-face for traders, who earlier this week had almost completely discounted the possibility of a large cut in the wake of a hotter-than-forecast consumer price data, and signs the U.S. labor market remains relatively robust. The trigger for the repricing was a Wall Street Journal report yesterday that Fed policymakers were considering whether to reduce rates by a regular quarter point or opt for half a percentage point. Well, I hope they just go ahead and do the half point. Speaking of AI, Meta Platforms, Facebook, will begin training its AI models using public content shared by adults on Facebook and Instagram in the UK over the coming months. I'm surprised they're doing it in the UK, considering the UK is fining them this phenomenal sum of money. The company will use public posts, including photos, captions, and comments, to train its generative artificial intelligence models, adding that the training content will not include private messages or information from accounts of users under the age of 18. And last, starting next year, China will raise its retirement age for workers, which is now among the youngest in the world's major economies, in an effort to address its shrinking population and aging workforce. Remember, China had the one baby policy for so long, and they had to know what that was going to do to their workforce, but I guess they weren't thinking 20, 30, 40 years out. Now they actually incentivize couples to have more than one baby. The Standing Committee of the National People's Congress, country's legislature, passed a new policy today after a sudden announcement earlier in the week that it was reviewing the measure, according to state broadcaster CCTV. The policy change will be carried out over 15 years, with the retirement age for men raised to 63 years old and for women to 55 or 58 years, depending on their jobs. The current retirement age is 60 for men and 50 for women in blue-collar jobs, and 55 for women doing white-collar work. We have more people coming into the retirement age, and so the pension fund is facing high pressure. That's why they think it's now time to act seriously. Imagine. I never knew this. Women in China. Blue-collar worker, retire at 50. White-collar worker, got to sit at your desk an extra 5 years. That's all news to me. I was not aware of that. I do know Australians laugh at Americans because we work so hard. I mean, that's kind of part of, the hard-working American ethos that we've always lived with and grown up with and been taught. The harder you work, the further you'll get. The Australians, they'd rather lay on the beach. They think our 40-hour work week is absurd. I can't remember the last time I only worked 40 hours. But anyway, Logic 247, our 24/7 around-the-clock E-mini alert service. We're currently in week 319, and over the last 319 weeks, we've issued over 17,800 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process we teach all of our passport holders. This week, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 49 Logic 247 alerts. Still waiting on the outcome of 8. Now, this recap was done this morning at 6:30 a.m. Eastern. Valerie will update it and finalize the week this afternoon. There have been additional alerts put out since then, so this number here will increase. Typically, it's somewhere between 50 and 100. Of the 49 alerts issued, we had 41 actionable alerts, of which 5 or 12% would have been stopped out, again based on market structure, and that simple process we teach all of our passport holders. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session and vice versa. Each logic alert has an entry price, an initial target designed to help you get your goal for the day, and then often a second, third, fourth, fifth target, and a final trade to target. Those additional targets on a long alert, it says PR, potential resistance. On a short, those additional targets says PS, potential support. The purpose of the logic alerts is not for you to just trade them so you don't have to learn how to trade. That would be a mistake. Don't do it. Use the logic alerts to help you learn how to read the chart. You want to learn how to trade, obviously, but before you can learn how to trade, you've really got to learn how to read a chart and understand multiple time frames. All logic alerts are built off of the 30-minute chart. Nothing magic about 30 minutes, just the time frame I chose many years ago. It's not broke, don't fix it. We're sitting at 12% this week. I think last week we ended up around 12%. I think. Anyway. 2 weeks ago, we actually had a week at 26%. I think 2 weeks ago, 3 weeks ago. But the average over 319 weeks and 17,800 alerts, still well below that 20% or less average that we shoot for each week. Use the alerts as they're intended, and within a couple weeks, you'll be able to look at a 30-minute chart and instinctively know what the next high probability move is. Up, down, where the move should be entered, where you should expect resistance. It's all there. But you got to show up, you got to do the work. You'll learn the process, and then you'll go, man, that was so simple. Why didn't I see that before? Well, it's simple because nobody showed you or taught you. So all I can say is use them as they're intended. Now, 319 weeks is a long time ago, but way before that, we had our concierge trade alerts. And they're a little bit different. Number one, they don't come out around the clock. They're published as a static report shortly after the Globex open each evening. Of course, today's the Friday session, but the Friday session began last night at 6 p.m. Eastern. Just like the Monday session coming up will begin Sunday night at 6 p.m. Eastern. So 10 minutes after the market opened, all of our members had all of these targets. Okay. Now, if you're a member, you can read these instructions up here, how to properly use these, what they mean, and even if you're on the free trial, you'll have access to this information as well. So let's go take a look at where we are right now. The daily chart of the ES. We hit the 38% fib extension. We spiked it. We got about halfway, maybe a little better, to the 50% fib extension, where we expect there to be good resistance. I mean, look at all these days where the 50% fib extension was good resistance. Now, price could be backing up to make another run at it, but time will tell. The daily chart is important because institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size. They trade at incredible size, and the size they trade in is what actually moves price. You and I, we're just kind of liquidity. So if you'll make it part of your daily routine, whether you trade futures or stocks, crypto, Forex, ETFs, doesn't matter. Spend 2 minutes with the daily chart before you go to your smaller time frames and start trading. See which way the wind's blowing. Peer over the shoulder of the deep pockets and look at what they're looking at. Now this morning, we had a green candle all the way up to the high of the day at 56.40 and a half. It's a bit of an odd area for them to back off. So I'm thinking we may see a second push. But this much I know. If we should close the session today back below the 38% fib extension, then we'll probably see lower prices Sunday night. And of course, we've got support here times 3. We're at this is the 24% fib retracement. That's based off the low of April 19th and the all-time historic high of July 16th. That's the shallowest possible fib retracement, the 24, which is right here, this line. But you've also got the daily BBC and the daily step line right there. That's support times 3. So if we do close below that 38, and I'm not forecasting we will, I'm just saying if we do, then if Sunday night we find ourselves down into this area, you should anticipate some pretty good support. And potentially a bounce that takes us back at least to the 38 and possibly the high of today. So anyway, whatever you trade, just make it a part of your daily routine. Spend 2 minutes with the daily chart. Identify major areas of resistance and support. Okay. Then drop to your smaller time frames and begin your trading session. It's been a bit of a flat day or a flat session. Yesterday was a pretty flat session. The vertical line separates today, Friday, Thursday, back here's Wednesday. When price rallies up to a weekly zone, we expect resistance until proven otherwise. When price drops to a weekly zone, we expect support till proven otherwise. Now yesterday, the market tried multiple times to break through that zone. The zone is 55.77/78. So we spiked it, but again resistance. And then yesterday afternoon, during the broadcast, we actually managed to trade through. Now, that's called a slice. One of 3 things happens when price encounters a weekly zone. 70% of the times consolidation. 20% of the times rejection. 10% of the time is the slice. That's when on the 30-minute chart, price slices through a weekly zone like it's not even there. When that happens and that move runs out of steam, it will quite often retrace back to the zone it sliced through and then continue in the direction of the slice, as it has done. Here, this was support times 2, because when price pulls back to the BBC, we expect support. When price drops to a weekly zone, we expect support. Again, until proven otherwise. See, coming up, it was resistance, 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 until it finally made its way through. Took a lot of attempts, but it finally got through. These are the zones that were published Monday morning at 6:15 a.m. Eastern. We've published the zones for our members every week since December 14th of 2009. So we're closing in on 15 years. Once the zones are published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. Do not change in any way whatsoever. So this was the open last night. Price attempted higher, but blue and climbing had gotten directly above price. That turns it into resistance because it's probably on its way to turning into red and falling, which is bearish. So it took us down a little bit. We didn't get all the way to the BBC on that move. But buyers took that opportunity to push us up right to the zone, or right to the target, right to the tick. Resistance sends the market looking for support. Support sends it back to resistance. Resistance sends it back to support. Now the green line, the BBC, stands for bull bear cross. When price is above the green line, we're bullish and anticipate higher prices. When price is below it, we're bearish and anticipate lower prices. Markets are fractal in nature. The BBC can of course be applied to a 30-minute chart, but you also just saw it on the daily chart. You can put it on a weekly chart, a monthly chart, a 5-minute chart, a tick chart, a range chart. It doesn't matter. It does the same job no matter where you apply it, whatever time frame, whatever market. Above the price is above the BBC, bullish, expect higher prices. Below the BBC, bearish, expect lower prices. It's really quite simple. And as you can see, these pullbacks to the BBC held. Pullback holds more often than not. Even this pullback here, even though we spiked it real good, you can see that all of these candles are still touching the BBC. So it held. And when we took off, we had that perfect stack. Price, step line, blue and climbing. Now when we hit the high of yesterday, this candle right here, 5607. Yep, 5607. This was a huge red candle all the way down to the BBC. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. And again, the pullback holds more often than not, as it did here, as it did here, and here, and here, and here, and here. So we have a high on the day of 56.40 half. Currently, price is in retracement mode back to the BBC. Again, we expect that to be support until proven otherwise. Now, even though the pullback holds more often than not, eventually we know price is going to trade through it. Keeps the markets fluid and tradable. So if on this pullback, on this retracement, if that's what we get, see the step line is just now crossing blue and climbing. You got blue and climbing and the step line directly above price. So those are obstacles that price would have to overcome to challenge the high of the day. if price were to trade instead of bouncing off the BBC, as we saw here, if it were to trade through the BBC, then looking left, 55.90. Yeah, 55.92. All the way down to the zone at 77.78. That would be a great window of opportunity. Now, this is not the highest weekly zone. There's still one more zone up above. On the Dow, here's where we opened last night, and we made the run. Now, blue and climbing, when it's above price, is resistance, but what did price do? It ran right up to blue and climbing, and it hit the long target. Resistance sends the market to support. Pullback holds more often than not. So we get another run up to and through the target. You go left, you'll find resistance. Pull back to the BBC, support. And then another leg. There's a series of tops across here. But the pull back here and the pull back here and here, they all held and took us to the high of the day at 41,569. See how the step line has hooked right on the way up. The step line and blue and climbing were parallel. But once you see the step line starting to hook right, that's an indication. And when it actually crosses blue and climbing, you should anticipate a retracement back to the BBC. Now, on a retracement, there's the potential for the market to find support here at the zone. This is on the way up. It hit the zone and then reversed. This candle open, pulled all the way back to the step line, and then overcame the zone. And that's how price moves in legs. Leg, retracement, leg, retracement, leg, retracement. Now price is testing, blue and climbing, and testing the step line. If it's able to overcome both of those, then you got a nice window of opportunity right there. If price drops all the way back to the BBC and trades through it, you could have a window of opportunity right here. And then again, see, you've got some, see these wicks? The low of each of those wicks is potential support. So a conservative trade, for you to come down below that last wick right there, and then tighten that up. This short target is based off this bullish cross. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support the first time. Okay, so doesn't look like it's going to happen today. So keep it in mind Sunday night or Monday or Tuesday or a week from Monday or a month from Monday. Whenever price comes back to this area, important prices, important areas are almost always tested. Eventually, this will get tested. Okay? Now, if things just fell out of bed for some reason today, I would want to get below all this and this. And then here, 41,010. That's 60 points right there in that window. You only need 20 points to get your goal for the day. The Russell, today's rocket ship, well, along with gold and silver. Here's where we opened last night. We ran into red and falling here. We were trying to get to the target. You only need 2 points to get your goal for the day. Price pulled back to the BBC. It always does. It always reverts to the mean. And that support took us right to the target. And then we had a shallow pullback to the step line, which gave us a leg and a retracement, a leg and a retracement, and a leg. And then this candle did the slice. And when it ran out of steam, it retraced right back to the weekly zone. And then continued in the direction of the slice. And as you can see, the step line, just like the ES and the Dow, is in the process of crossing blue and climbing. Once that happens, then you anticipate a retracement back to the BVC.
Okay, I am here, just so you know.
Okay, we'll pick up with the NQ when I come back. Michael's going to give us a recap of everything that happened in the live training room this morning.
Yes.
Then we'll do some live trading on TradingView for 30 minutes. And then, again, I'll finish that recap and wrap things up with our good word for the week.
Okay. Me. Copy this. I'll bring it over here. Now. Here it is. Come over here. There that is. Let me just make this one quick change right here.
It looks good.
Good. Then we are almost there. Yeah. That and click this and paste that and hit done and publish. Save and publish. There we go. All right. So here we go. If you have not taken a free trial with us and you want to take a free trial with us, let me refresh this right now. If you have not taken a free trial with us and you want to take a free trial with us, go here. Oh, I didn't see. Good afternoon, everyone. Today is Friday, the 13th day of September 2024. Now, if you've not taken a free trial with us and you want to take a free trial with us, go out here to mytradingiq.com, click on the purple button, and you click on that. It is going to bring you to this registration page that I just updated. It's going to bring you to this registration page where all we ask for is your name, your email, your phone number, and down here, 5 multiple choice questions. If you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. If you don't have TradingView yet, you should really get TradingView. It's worth it. All right, you get it for free. The data you do not get for free. The data costs $7 a month for futures. If you want data for equities and stuff like that, you do get that for free. But data for futures is $7 a month. But it is well worth it. As we will show you. That is how you take the free trial. Click on the purple button. No credit card required from our end. Okay, so the results for today. Now, the results getting the goal were great, as usual. We were back and forth a bit today. We did not end at the high of the day, but we had a pretty good day overall. We had a lot of stop outs on the NQ, but we managed to come back and do pretty well with it after all. Yesterday, I made 3 mistakes, and I paid for every one of them. Today, I only made 1, I think, and I paid for that one. But as it is, if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. I don't know if I said that yet, but I have to say that every time. Today's the 13th day of September, 2024. We made 120 ticks on the NQ, 49 ticks on the Russell. We lost 45 ticks on the YM. We're negative on the YM on the month so far. We haven't had a negative month on the YM in a long time. We're +2 on the ES. That put us at 645 overall. Today it took 2 minutes and 2 trades to get to $1,350. And we took a total of 21 trades this morning. So on a month now, we're at 95.42. So this is working out to be a pretty good month too, guys. Last month we had our best month of the year, and this month is no slouch. We should actually have a much better month than last month. We still have a full 2 weeks left, 2 business weeks left. We have 10, 11 business days left. I don't think we have any more vacation days off this month, so we have 11 business days left to the month, and we're not even halfway through the month. We're already at $9,000. This is going to be our best month of the year. We have been consistently getting great numbers here, and this is all since we simplified things, right? But on the month now we're at 93.42, averaging $1,038 per contract for 2-hour business day. On the year we're now at 79,142, averaging $460 per contract per business day. Now, over here, the 24/20 blueprint. Today it took 2 minutes and 2 trades to get to $1,350. So if you were to quit trading when you get the goal for the day and add 1 contract per month, right now you'd be on your 9th contract this year, and you would be averaging $2,226 per hour for the 51 3/4 hours you would have had to work this year. You would have only had to work 51 3/4 hours so far this year, averaging $2,226 an hour. The number of trades and the number of minutes. This is pretty awesome. It really is. Anyway, let's get into the actual trades. Okay, we had trades on every market today. The YM did not do so well on. Yeah, I'm gonna pop that back a little bit. And on the YM, ooh, that's really big. On the YM, this is the mistake I made here on the YM. I ended up stopping out on that somehow. I don't know what I did. I think I was in 2 other trades at the same time, and I ended up stopping out on that one when I should have had it at break even or profit even. But our first trade on the YM was right here. We picked up 5 ticks on that, and then we stopped out on that one, and pretty much stopped out on that one. So we were at -20 at that point, and I stopped out here. That put us at -45. We had 1 more break even trade that we took right here, and that was all that we did with the YM in the morning session. Right after, during the break, there was 1 nice long trade right there. And this would have been a break even right here, then nothing else in that direction. This would have been the first trade right here on the short side, and it would have stopped you out. Nothing else in that direction. So the YM wasn't too cooperative today. It was good enough to get the goal for the day if I had hit every trade just right, but I did not. The Russell was a little more cooperative. Let's go back to the beginning of the Russell. Oops, this is the beginning of the Russell. Okay, so on the Russell, our first trade was right in here. We picked up 30 ticks on the first trade. Then we had a break even, another break even, and there's a couple of trades missing in here. Went from 30 to 49, so we had a 19 tick trade somewhere, and then we had a 20 tick trade after that. So I think this was the 20 tick trade right here. And I believe we had a 19 tick trade a little before it right in there, or it might have been over here. But we had a 19 tick trade, and then we had a 20 tick trade to get us to 69 on the Russell. Okay, and during the break, there was 1 trade right here that did put in a higher swing. That was a good trade. Didn't have anything else in that direction. Nothing else at all, really, during the break on the Russell. Okay, and on the ES today, let's go all the way back here to the beginning. On the ES, all right. So this is at the beginning on the ES. We ended up with a break even on our first trade, and we had a +4 on that one, and a +8 on that one to get us +12 overall. We stopped out there, and this one was another mistake. I guess I had 2 mistakes today. The reason it was a mistake is because we didn't come out of the overbought right there. But I took that and I stopped out on it, so that put us down to 2. So I had 2 mistakes today, and I paid for both of them. I stopped out on both of them. At the end of the session this morning, it got really choppy as it related into the European close. Then once it did close, there was 1 long trade right here, gave you a decent trade, and another one right here, a follow-up trade right here that would have been enough to get the stop to break even. Flip directions, gave a long trade right there that would have been okay. A short trade, sorry, a short trade there that would have been okay. If you spread it out, you'll be able to see that there were full lines and ribbon showing right there. A short trade right here, that would have been okay. A short trade right here, that would have been good. Then you flip directions, and it's got a long trade happening right now that you could still be doing right now. We try to put it on. As a matter of fact, I just did put it on. It's got a long trade happening right now. After 4 ticks in profit, the stop's going to go to break even. It should get up to right there at a minimum 36.50. Okay, it's probably trying to get up to this level right up here. It is almost at a resistance level that it found before right here. But we'll see. It's got 10 ticks of risk on it, and I'm going to let it go. 36.50 is what it should be trying to get up to. We need 4 ticks in profit to bump that stop to break even. Okay, 4 ticks in profit. And I'm going to pin this because we don't need to watch the chart anymore. Now that the trade is on and we did it correctly, we just need to watch the DOM. Okay. On the NQ today, there was something else that I just saw over here on the side that I need to actually take care of fairly quickly. And I can multitask just like this. And I will get that done. just like that. See that, and done, and publish again. Save and publish. All right, so on the NQ this morning, we did have this. You guys see a lot of these red ones here. All right, we need to go to 4 ticks in profit right now. Sorry, we need to go to break even right now on the ES trade. It went to break even plus a tick. Oh, I left it this way last night. Went to break even plus a tick. Okay, last night in the partners meeting, we were talking about how to move the stops to break even plus a tick and whatnot, how to set it so it will go to that point. All right, so right now, let me get the ES chart back here so we can look at it now. Now that we're running the thing, and we should be running, judging by the DOM is where I'm putting, why I'm putting the order right there, okay? Now we're in at 0.25 down here. So this is 12 ticks, 13, 14, 15 ticks right there. This is what it should go through right there. That number is what it should go through. We have 4 ticks locked in. I'm gonna let it go. Okay, we have 4 ticks locked in. Once it gets through this, it should go right up to that. So it's trying to get through this one. And that should go right up to that one. All right, that is reading the DOM. That was in yesterday's lesson plan for those of you guys who are curious. I do have to put the lesson plan things out there, the recordings that I made anyway. I know Val's putting the recordings that she makes out there, but the recordings that I make are shorter. They usually start at the beginning of the lesson plan and end at the end of the lesson plan, usually. All right, so we are going to hit that 14. You see this number up here? It does want to go up to there too. So I'm just going to lock in some more profit on this. What do I have locked in there? 10 ticks locked in. All right, I'm going to take the 10 then, I guess. And that was an easy 10 tick profit right there. What was that based on? Coming out of the oversold right here where the ribbon was spread out. Everybody could have done that one with me. Everybody. All right, scrolling back here. On the NQ, we had this short right here that didn't go anywhere. It was a break even. This long right here on the NQ, our first trade on the NQ, we picked up 48 ticks, right? And we stopped out, put us down to plus 12, stopped that again, put us at minus 24, no, minus 36. No, it should have, yeah, see, I got it wrong. It should have put us at minus 24, so I'm off by 12 ticks in here. When we stopped out on that second one, it should have put us down to minus 24. And this was okay to take here because this one didn't put in a higher swing. Really, what I always say, and you guys may remember me saying this, you should never stop out in the same direction twice in a row. If you do, you've done something wrong. We did stop out in the same direction twice in a row, but we did have a trade in the opposite direction before that. Okay, so there was a trade right here in the opposite direction that if I had taken it, it would have been, probably would have been a stop out in that direction. So it would have been a stop out there, and then a stop out there. But anyway, I stopped out there, then I stopped out there, and that should have put me at minus 24. I've written down minus 36, but it should have put me at minus 24. And then the next trade that I took here was a plus 48. I'm just going to go through with what I have written down. All right, I have written down here that I was at minus 36 there, and then the plus 48 put me at plus 12. Then we had a break even, another 48 put me at 60. Then another 48 put me at 108. Then another 48 put me at 156. Then a final stop out over here put me down to 120. Now I'll just say at the end of it all, I was really at 132 because I was off by 12 ticks in my sheet. But I was really at 132 at the end of it all this morning. And then all the markets, all the indexes got really choppy and sideways at the end of the morning session. I'm glad to see that they came out of it, but I was actually putting the cover on my boot when that happened. So there was a shorting opportunity right here during the break, and another shorting opportunity right there during the break that did not put in a lower swing, so you did not do anything else all through here. And it never gave you the long opportunity in here. So there were a couple of nice shorts there during the break that triggered. Now, those of you guys that are in here who may have been in a partners meeting last night and not in the morning session, let me just look and see. I don't think anybody that's in here right now, maybe Keith or Joseph or George. The rest of you guys, I think, were in one or both of those other things. But one of the things that we talked about last night, well, first, let me just finish saying all this stuff. If you're going to read the spreadsheet, you got to read all the CTC risk disclosures down at the bottom. Today is the 13th day of September 2024. We made 120 ticks on the NQ. Actually made 132 ticks on the NQ. 49 ticks on the Russell. We lost 45 on the YM, and we made 2 on the S. We're at 705 this morning. They took 2 minutes and 2 trades to get to $1,350, and we took a total of 21 trades. So on the month now, there was actually a 30-tick trade that I took on the YM. A 30-tick trade that I took on the YM that I only had 1 contract on. That's all the stuff that I had done last night using the DOMs and all that. I messed it up. But on the month now, we're at $9,402, averaging $1,044 per day. On the year, we're at $79,202, averaging $460 per day. This stuff is all the same. If you were to quit trading when you get your goal for the day and add 1 contract per month, so far this year, you'd have only had to work 51 3/4 hours, and you would have averaged $2,226 per hour. You'd be trading 9 contracts right now, averaging $2,226 per hour, and we're going to have our best month of the year this month. And that's saying something, really, because we had some pretty good months. All right, just a ton of volatility. That's a good thing. Now, the thing that I was going to show you, this is what we talked about last night in the meeting. I said in the meeting last night, the bigger the range bar, the more likely the trigger bar is going to be the pivot. Okay. So in saying that, your stop, when you have a larger bar, your stop, with respect to the actual bar size, is smaller than your stop would be with a smaller time frame. It's like even looking at the 31 range right here. See all these bars right here on the 31 range, like from right here at 12:17. Let's use this one right here at the bottom of the range, 12:16, 51, all the way over to, let's say, 12:46. 30 minutes right here, 12:16 to 12:46. You have all these bars right here, all these sideways choppy bars right here on the 31 range. Put that on 100 range, and you have 12:16, you have 12:17, which is right here, to 12:46 right there. You have 3 bars. See, and no trade setup at all. So it takes out a lot of the noise, right? The thing that I said last night is if you have, the ribbon's kind of right. It's not always going to be right with a 100 range bar. You could actually just take the ribbon out for the most part. But the trigger bar, when it comes out of the oversold or the overbought, is usually going to be the pivot bar. So your stop just needs to be on the other side of that. And I said that in the meeting last night. And then last night after the meeting, this happened right here. Was it this one? I took it on. It was 100 range and in Q. It was last night. Sorry, that's not last night. It was 100 range in Q. And it was all right in here. I think it was this one. Yeah. See that one? It was this one right here, I think, after the meeting. Yeah, it was this one right here. After the meeting. At 2240. I got long right here on the 100 range bar with a 115 tick bracket. Okay. And I had my stop was down below this bar. Now my entry was a little above the open. That's why I used 115 rather than like 105. But I had enough room between here and here to have a 115 tick bracket on. Because I looked left to the swing high, and it was enough room to get 115 ticks in between there. My stop had to be 115 to keep it below here. So just put that order on, and I went to bed. and when I got up at 5 o'clock in the morning, not only did it fill me with 115 ticks profit, but it actually triggered again here for about 80 ticks profit, triggered again here for about 90 ticks profit, right? When it came out of the oversold, that bar that comes out of the oversold is usually going to be the pivot, all right? And so I showed people this morning how to create an alert. I created these 2 alerts this morning, and these are price alerts, all right? They're price alerts based upon what's going on down here with the range trigger. So what it says is every time it goes into the overbought, or every time it goes into the oversold, it gives an alert that says crossing up above the 85. That means it goes into the overbought. Because if you're in a downtrend and it goes into the overbought, you're getting ready to take a short. If you're in an uptrend right here, crossing down below the minus 85, if you're in a downtrend and it goes below the minus 85, then it's getting ready to go long. All right. So I have it given an alert every time it does that. And this is the log of the alert since I did that this morning in the room. All right. You can see how many times it's done it. Since 10:15 this morning when I created that, it's crossed back and forth above and below that many times. So that does not take into account what the ribbon is doing and all that, but it does basically give you this information. So what we're looking at this morning was, you know, we're giving you this nice long right here. Again, you are only trying to get the goal for the day, right? So if you got this long right here and you had 100, let's say 110 bracket around it, you had 110 ticks right there. That's 5 times the goal for the day. You don't need to trade again. If you chose to trade again, you know, you're not going to take longs when it's coming down against you. I mean, shorts when it's coming down against you, like these shorts right here when it's going up against you is what I mean. And this long right in here, you know, this going out of the oversold right here, if you didn't have the ribbon on there, you didn't have lower lows here, so you could still think you're in an uptrend by having that higher high. This one right here, this pullback, put that leg up. I wouldn't have done that. This one right here would have been something that I'd do right here. And this pullback almost to stop you out, but then it ran up and gave enough to get the goal for the day. Again, the 100 ticks of 110 ticks or whatever. And then over here, this one right here, I probably wouldn't have done because the ribbon's all crunched up. But you only need one of those a day. Right? And this is on the NQ. So what about the other markets, you ask, right? That's probably what you're thinking. What about the other markets? What about the Russell? If you do the Russell, can you do the Russell on 100 range? Well, you can, but you're not going to get very many trades, right? The trades this morning, there were just a few, 2. Actually, there was this one right here, which was awesome, and this one right here, which was equally awesome. That was all day, but that's probably not going to work out for you. So with the Russell, because the average true range of a day in the Russell is much smaller than the average true range of the NQ, just look at the price. I mean, the price is, well, this is at 2,000. What's the NQ at right now? Let's see, NQ. That's natural gas. NQ, I believe I have all that stuff down here toward the bottom. I believe I have it over here on this other monitor too. So the NQ is trading at 19,500 right now. And this is trading at 2. So, you know, your average true range, daily average true range is going to be a lot smaller. So this is going to have to be smaller. Say cut it in half to like a 50 range bar. Okay, a 50 range bar. And then you're going to get more opportunities. There was one right here, one right here, and one right here. Every one of those was a fantastic trade. So in this one, if you had like a 55 bracket, bang, 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 every one of those. And every one of those 55 brackets is twice your goal for the day. So what I'm saying is using the TV trades range trigger with the ribbon, if you use a larger time frame, you're gonna have to use a bigger stop. And if if the bigger stop is too much for you with the regular contract, you can use 5 micros and cut the value of the stop in half and still get the great move, right? With the fewer trades, if you want to do it that way. You could place 5 micros right here. And if you had a 50, let's say you had a 50 by 50 or a 55 by 55, let's just do the math. Okay. 55 times 5, 275 bucks. That's what you're risking, and that's what you're looking to make on each trade. Now, if that is too much and you want to just divide that by 2, you want to risk 137 bucks on each trade. Trade the micros, but trade 5 of them. That cuts the risk in half, cuts the profit in half, but it cuts the risk in half. And you're still able to get in on these fantastic trades. That one, and that one, and that one. And in that case right there, if you did exactly like I said, and you only made 55 ticks in profit, and you did it all 3 times, that's 412 bucks. 412 bucks in profit. Right? And that's if you did it with 5 contracts on. Micros.
A lot of people
5
might
micros.
not understand the leverage that futures offers.
That is true.
Like,
you want to explain it?
Well,
Yeah,
the current price of the ES is, what is it right now?
The S right now is at 56.38.
So multiply that times 50, because the ES is worth $50 a point.
It's
It's over a
I'll get out
quarter.
my-
It's
get out
over
my
well
yeah.
over $250,000. So for the $600 or $700 that it costs you to place a trade with one ES contract, you're controlling $281,900 of S&P 500 best of breed equity. Now go into your stockbroker and go, hey, I got $700. What can you do for me? He might say, let you take me to lunch. I don't know. It's a whole different world. And it's not like options where most of them expire worthless. I know you've heard that. And people think options and futures are like the same thing, but completely different animals. Trade around the clock. You control for $700. Think about it. You're controlling over $250,000 of equity. Oh, but I could lose a $250,000. No, you've got what's called a hard stop. So you're not even risking the full 700. You're risking wherever you put your stop loss. If it 10 ticks, 20 ticks, 30 ticks, that's your risk. So anyway, I just thought some people might not know that. Need to hear it.
Yeah, and with the NQ, well, with the Russell, I'm saying with the Russell, it's $100 a point with the Russell.
So you'd go 2188 times 100.
Yeah, 2188 times 100. That's whatever that is. And it's 2188 times 100. It's 21,000, I think, right?
Mm-hmm.
Oops, did I do that wrong? 2188 times 100. Oh, 218,000.
Right.
Okay.
Yeah.
Yes.
So just shy of $250,000 for whatever it cost you with your broker to trade one contract. So,
and
yeah, that's all. I just wanted to share that real quick for those who don't know.
Well, that's good. And anybody that's watching YouTube too, because we don't know the people that are watching out there. But I want to also introduce to you the micros, because micros are a more mature investment type now than they were when they first were introduced 2 years ago. And you can use them. Before, to trade 5 contracts on a micro, there was a spread all the time almost, and you'd have a lot of slippage and all that. But it turns out now the liquidity in the micros is much, if not better, than the liquidity in the regular contract. So you're not going to get the slippage. You're not going to get that gap in between your bid and ask all the time and everything else like we used to have. So you can trade 5 micros. If you're going to trade like 10 micros, then you might as well just trade one of these, because that's the equivalent. But if you want to cut your risk in half, or less than half, or maybe 3/4, then trade micros, but trade a number of micros, and you get the same advantage of the trade trigger being where it is on this time frame. And if you say, well, that isn't the micro, do MRTY. And, you did see it. It's not MRTY, is it? Micro. The mini. Let's just do futures. And then Q, here it is. Micro Emini Russell, it's the M2K. All right, so if you look at the M2K, the same thing right here. All right, same trades, same 3 trades. And if you had your entry and your target, even if you only had a 55 tick target, I mean, you could do like a 75 tick target, a 55 stop with a 75 target, and that would have worked out fine with every one of these. But if you did a perfect bracket, a 55 by 55 bracket, and I'm saying 55 because it's 5 more than the bar size, right? This whole conversation started because I was saying with the larger time frame, it just needs to be a little bit bigger than the bar, because the bar is usually going to be the pivot bar. In every one of these cases, it was the pivot bar. That one, that one, that one, that one. If we keep on going down, that one, that one, that one, that one. You see what I mean? So you can take advantage of those, of the larger time frame moves with half the risk. Does that make sense? you know, if trading one contract with a 55 stop is too much for you, if you don't want to risk $275 on a trade, you want to risk half that, then trade in the micros. Okay, that's what I was getting at. Because that came out of last night's meeting, and when you're using the range trigger down here like that, it is really, really good at picking the pivot bars. Okay. And that is what I wanted to go through in that. Now, I don't know that we had any other trades. We had that one trade so far. Right? Didn't we have one profitable trade so far? Or did we have one stop out? I think we had one profitable trade. Yeah, it was the CS. We took profit on the CS trade right back here. It has since given another trade. This is a 7 range. This is the MK. We didn't have anything here though. Let me pump this back to the NQ. And we'll put it on the 31 range. Okay, we're going to be rolling next week, guys. All these indices next week will be on the Z contracts. Probably Tuesday, Wednesday next week will be on the Z contracts. And Dwayne's going to do the weekly trade zones Sunday night based on the Z contracts. Right. So when you put the weekly trading zones on Monday morning, you're going to be putting them on the U contract, but we're going to roll to the Z during the week next week, and so you won't have to make any adjustments. Okay. All right. So this one right here, one more. Bam. This one was the last one over here that actually triggered while I was talking. So we could have taken this NQ trade right here. Triggered while I was talking, could have taken probably 48 ticks on that. Did it go 12 points from entry, 49.50 up to 57? It didn't go full 12 points, so could have taken the full 30, but we could have taken 20 easy on that. And if we spread this one out over here, now we're not coming off a higher swing. This was the swing high over here. All right, we never got a trade after that, but there's nothing that I want to do right here. The ES, we had this one right here that was the opportunity, and I would do anything with that. The YM right now, well, that needs to pull back and get into the oversold. Okay, pull back and get into the oversold there. All right, so that is all that. It's now 128. God, I almost used up the whole session. Slide that over there and that down there. Not rolling to December until, it's probably not going to be until midweek, Michael. Tuesday, Wednesday, probably. It's not going to be on Monday, I don't think. The volume right now, if I go check the volume right now, check the volume right now. The ES right now, it's 50% right now. 50%. Well, it's actually 30%. It's a million on the U contract and $500,000 on the Z contract. So it's running at 30% right now. Okay, but that should change probably Tuesday, Wednesday next week. It's probably going to change. Okay. See this?
So again, for everyone who didn't hear earlier, I'm just going to go ahead and roll this weekend, Sunday night.
Yes. All right, because I mean, all these things that we're doing right here, you do the NQ. It's liquid enough right now to trade the Z contract. Okay, and the signals are pretty close to the same. If I shut down the U DOM that I have going here, and I bring up the Z DOM. Here it is right here. Here's the Z DOM. So there's a little bit of a spread in the Z DOM right now. But by Monday, that'll probably change. Right, by Tuesday for sure.
Yeah, and this week's zones, you can just hang on to those till Monday, Tuesday. whenever the roll happens.
Yes, that is true.
It's all about important prices, important places, and so it really doesn't matter. But since we're heading into the Z, I'm just going to go ahead and get it done.
Yes, and that'll save all the questions.
And volume will be split, Monday and Tuesday. The markets may look a little lackluster because you're going to still have plenty of people trading the U contract. So,
yes. All right. Oh gosh, this whole session went by already. It is now 13:30, so I'm going to have to wrap it up and pass it back out to you. Fabulous Phoenix, Arizona, in Studio A, overlooking South America's largest city park. If you are ready.
yep, I'm ready.
Excellent.
I was just trying to get a simple answer out of the T-Mobile guy in the little chat box on their site.
Yeah.
And I said, so if I get this business internet, I can take it anywhere that there's a T-Mobile 5G signal, and it will work just as if I was at home, correct? And he couldn't give me an answer.
Yeah, they're not going to give you that answer because I don't think that's what they're trying to sell it as. But I know that you can do that.
Yeah, because you've actually done it. Yeah. Well,
But
it
they're
only
not
makes sense that any place there's a T-Mobile 5G signal, there's no reason it wouldn't work.
Right. But they're marketing it as the home internet thing.
That's what he kept saying.
internet.
Is this home or business? I go, what's the difference? And you know what? He couldn't answer that question.
Yeah.
So, and I'd already got past the automated AI bot, and actually I had a human being. I finally said, you know what? Take all the time in the world you need to research it. Here's my email address. I already have T-Mobile phone service, so just send me the details at your leisure. So,
yeah, if you already have the T-Mobile service, I mean, you can just walk into a store today and get it and go home and it'll work when you get home.
well, Han sent me a link in Telegram either last night or this morning, but he gave me a link that took me to the T-Mobile Business Solutions page. He said, Dwayne, the only thing I can figure out that's different between the home and the business is the price. Exactly.
Yeah. Yeah. I imagine it's more expensive. I use the home version, and as I said, I've taken it all over the place. So you can do that if you want to. You don't even have to argue with them about it. Just say I'm going to use it at home. And like our other one, we had two of them here. I told you, and we took the other one over to Jada's mom's house, and she's using it over there now. So you can take it wherever you want. Home is wherever you put it.
When I was going to downgrade, every year I got to call them and negotiate and threaten, blah blah blah. I said, well, why don't I just knock my business internet I have? Why don't I just knock it down to the residential? It's the same speed. He goes, you're right, it is the same speed, but you're going to lose a very important thing. I said, what's that? He goes, residential has a data cap. Business has no data cap. And looking at years of your records, you use a lot of data.
You definitely need to have unlimited data. The T-Mobile thing that I have has unlimited data.
Yeah, and it needs to be the unlimited data with no fine print below it. Where it says after so many
slow down.
Slow you down. Yeah. Okay. All right. I took it back. Recap of the morning session.
Today I took 2 trades in 2 minutes to get to $1,350.
Great way to end the week.
Yes, it was. Thank you, everyone. Be safe.
All right.
Good decisions.
Have a good weekend.
You too. Bye.
All right, guys. On the NQ, here's where we opened last night. Flat and sideways. We got a little bump here. But again, price pulls back to the BBC and the pullback holds. So we get a leg up and a retracement, and the BBC holds. and it holds, and even here it holds because all of these candles are touching the BBC. So we hit the long target once and we hit it twice, then we consolidated there for a few hours, and since the broadcast started, we have put in a slightly higher high. Broadcast started at 12, so at 12 the high of the day was 19,561. Now it's 575. So that covers all of the indices. Crude oil. Okay, here was the open last night. And remember, the CTAs came out 10 minutes after the open. Now this candle tried real hard to get to the target. It opened at 31 and it ran up to 50. So it's $190 per contract traded, but you only need 10 ticks. So if the high was 50, if you got in at 69.40, then that was your goal for the day. And then we got a retracement back to the BBC, and the pullback held. That sent us back up to the target. Resistance sent us back to the BBC again. See here, here, here. And then we overcame the zone. And we took out yesterday's high by a little bit. That sent us back to the zone. More wide-ranging consolidation. Then another pop. And then back to the BBC. And once again, the pullback held. And it's starting to look like that's going to be the high of the day. Okay. 70.32 for crude. Because we've now traded below the BBC. Hit the long target multiple times. But you see how you got this perfect stack, as I call it? You got price, step line, red and falling. Definitely looks like price is going to try and work its way down to the short target. Gold, new all-time historic high, right there. Now these are futures, it's not spot gold. There's going to be a difference. These are futures prices. But if futures are putting in new all-time historic highs, I'm sure spot gold is as well. Here's where we opened last night. Up we go to the long target. Spike it. Pull back into support times 2, the step line in blue and climbing. We get a higher high, a retracement, and then a higher high, and then a retracement, then a higher high. And now we get the pull back to the BBC. Price always reverts to the mean. Gotta have patience. Again, these are 30-minute candles. But when price pulled back, it held. And got a big leg and a retracement to blue and climbing. Leg, retracement, leg, new high. Now when the price of gold moves $1, that's worth $100 per contract. So we opened last night at 25.87. Let's just call it 25.90. Make the math easy. 25.90. The window, in case, first this was if the market fell out of bed and got below the BBC, this was your first window, and then this was your second window. And I went through, I explained everything, so if you missed it, you can always go watch it at youtube.com/CFRN. So we indeed fill that window, and that window was roughly 41,470 up to 41,520. Be conservative. That's 50 points. it takes. Got to get below that low right there. So I'm soon in a retracement. So now it's pulling up from below. Price drops to the VVC just shy of that fading. Let's get specific. If you earn your money honestly, then it's yours to spend as you wish. Once you give God his portion, you get to choose what you'll do with the other 90%. However, your financial decisions have consequences. Society doesn't confidence and integrity, and that is the path that always brings glory to God. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Discussed on this show